So manufacturing report says that because of all the closures of factories, the factories are not taking first quarter orders because there's absolutely no way that they could take an order today and have it finished by the end of the first quarter. So they're actually rejecting large first quarter orders. And from what I understand, the cycle in that industry is that companies would place I guess during the first quarter, they feel out how the year is going to be. And then by the end of the first quarter, they determine what their order is going to be for the rest of the year. So the second quarter orders are actually the crucial ones for the year. And it's where the factory makes a lot of money. And so the question is, will factories in China be able to take second quarter orders or not? And of course, we have no way of knowing that now. If they reopen February 14th, as they've claimed that they will, and if their staff and I don't mean to be facetious here, but if the staff is not dropping dead or sick or out sick, and if they can work at full capacity, maybe they will be able to salvage that industry. If they can't open during February, if they don't open in time to take the first quarter orders, that could have a tremendous negative impact on the manufacturing sector for the rest of the year. I mentioned in the other videos, the tourism sector has been destroyed. The domestic retail sector and restaurants are taking a huge hit because in some of these cities where they have lockdowns, the restaurants are also closed, from what I understand. I don't think there's a blanket restaurant ban in the whole country, but there are some cities where people are just not allowed out, basically. And, they have a schedule that you're allowed to send one member of your family out every so many days to buy food, and that's it. So restaurant sector, retail sector are all taking a hit. Now, if the lockdown doesn't last very long, this could recover because what is actually happening right now, a lot of the people that are home right now are receiving their salary. And I can't speak for every worker in China and every contract and how it's being handled, but a significant percentage of the people that are not working right now are receiving their salary. And so they're sitting in their home receiving the same salary they always receive, but they're not going out. So this actually works as a forced savings. And it can happen that when the ban is lifted, when they're allowed to go out, that they're going to go out and spend money. And there may even be initiatives. I mean, I saw it after 9/11 in New York that suddenly, the mayor got on TV, got on the radio and said to people, if you're a patriot and you want to help your government, go out and spend money. And they just encouraged us to go out and spend money. They even sent us little stimulus checks, $350 to go out and spend money just to get the economy going again. So this may happen in China. It's very likely that it will, because that's sort of what happened after SARS, but it depends very much on how long this thing takes. And also, and again, it's a very sad subject to have to say, but it depends how many people die. If lots of people are dead and people are unhappy and they're sad, and, that's going to negatively affect the economy. And of course, there's a superstition associated with New Year that if you have a bad New Year celebration, you're going to have a bad year economically. And of course, this is one of the worst New Year celebrations in memory. So the stock market reopened on Monday, and Monday and Tuesday, from what I understand, the entire market is down. And again, if you're a contrarian investor, if you're a value investor, you might be looking for markets that are down. And so I'm going to go in and buy up these stocks at a discount. The problem here, though, is that we don't know what the long-term prospects are for these stocks that are down. It could be that you're going to buy a stock that's down and then that company is going to go out of business. It could be that that sector is just going to be hit really badly and not recover this year. Again, we don't know. There's too many question marks. Now, there's always been questions about how much free market exposure, how much of a free market is or are the exchanges in China. The government definitely has some control over the exchanges. There are safety, they call them, what do they call them? Shock absorbers, safety brakes built in that if prices drop below a certain level, if there's too much selling, that these breakers kick in and they actually halt all the trading. And so there is a lot of government influence on the behavior of the stock market, which ultimately affects price. The reports that are coming out from the international media are that the Chinese Securities Regulatory Commission which is the regulators of the securities industry, that they've been urging mutual fund managers not to sell shares unless faced with investor redemptions. So if you're a mutual fund manager and you're managing a fund and you would normally sell off non-performing securities that are in that fund, and it would be based on your mathematical models and your investment policies and procedures and your investment models, which you by law have to disclose to your clients and which the clients agree to when they sign on. The Securities Exchange Commission of China, the Securities Regulatory Commission, is now telling you to violate your own procedures, do not sell unless specifically asked to sell by a customer. That raises so many questions, and that, along with issues with the currency and how much influence the government has on the price of the currency and how much influence they have on the market, it certainly raises the question, just how free are these markets? Should these be considered free markets? Should Chinese firms be allowed to list on the New York Stock Exchange and foreign exchanges? Should we be investing on these exchanges where the government has so much control over the price and over the movements of stocks, when they're being sold, when they're being bought? So I am a qualitative economist, not a quantitative economist. So there are people that will actually do the modeling, the mathematics that go along with these questions. But I certainly see this as a question, and this needs to be addressed. And I think that structurally, when we look at the trade war and we look at the issues in the phase 1 versus the phase 2 trade agreements with China, we start realizing that the problems in the Chinese economy are structural. Nearly 30% of the whole economy is the state-owned enterprises. You have state-owned enterprises that act on behalf of the government. They don't necessarily have to turn a profit. They may be driven by behavior other than profit, which then means they're not exactly free market, right? They're not behaving according to the market, and it means that they're unpredictable. It means that it's very difficult to compete with them because they can take loans and not pay them back, or they could behave in ways that cause them to have a loss economically, but that loss then benefits some other sector of the economy, which is dependent on those state-owned enterprises. So the coronavirus, the trade war, the phase 1, phase 2 trade deals, I think all are calling into question now individual questions that economists have had for the last 10, 20 years about just how much of a market economy is the Chinese economy, and should we be treating it that way, and should we be allowing China to participate in WHO, the WTO, international agreements, particularly if they're not adhering by the laws and rules and norms of those organizations, if they're skirting the rules. Should they be listing on the New York Stock Exchange if we know that the company is largely state-owned or state-controlled, if they're refusing to open up their books for audits? I think all these things are coming to a head now. And I would never have predicted that the coronavirus would be one of the things that is driving a closer economic scrutiny of China and their behavior in international markets. But it's very interesting, and I think that we're going to see a much closer scrutiny now, deeper investigations. We're going to see more reports from more think tanks, more economists, more quantitative economists that are going to come out and say that they're going to prove mathematically, or they're going to attempt to demonstrate mathematically or make a case mathematically that China is not abiding by the rules and should not be part of these international systems. If we compare the coronavirus epidemic to the SARS epidemic, which would be the closest comparison in Chinese history and our history in observing the Chinese economy and how it rebounds from an epidemic. With SARS, the lockdown period was only, I believe, about a month. They lost several points of their GDP growth during that time. However, it rebounded very quickly afterwards. But remember that the overall size of the Chinese economy in 2004 was much smaller than it is today. It's a much less developed economy. When an economy is developing, when they're small and they're developing, they can post double-digit economic growth. They can have growth of 12, 16%, 10.5. They can have these big numbers. You can't have that when you're an economy the size of China now. China is struggling to maintain 6. They ended the year with 6.1 last year. And this year, they're going to be hard pressed to keep 6, which is normal, though, for a very, very large economy. As it matures, as it develops, you just can't have the massive growth that you had before. But having said that, 2004 Chinese economy, you could flip a light switch and it raised the GDP by 1 point. But now we're dealing with a much larger, much more complex economy, and also that China is dependent on the world, and the world is dependent on China. So global manufacturing, for example, might be dependent on China because, the factories are closed. So global manufacturing is losing their workforce. They can't make products. Okay, but the Chinese economy is dependent on global manufacturing. What if global manufacturing now begins to shift away from China and they go relocate to Indonesia or Burma or Vietnam? So then global manufacturing will recover. But then how will China recover? Because they're losing those manufacturing jobs and all of the contributions to GDP that hosting those factories had. So everybody only thinks about the jobs. What about the fact that those companies were relying on services like transportation, provision of electricity and utilities and oil, and in addition to the workers, and then the workers were getting salaries and they were spending their salaries in the Chinese economy. So we're looking at a very different Chinese economy than we had in 2004. It's much more intertwined, interdependent with the world economy. It's a bigger economy. It's a lot harder to fix when something goes wrong. And you can't post double digit. Think about that. If they had lost 3 or 4 points of GDP in the first quarter, if they posted double digit growth in the second quarter, they could recover it. Well, you can't do that anymore. They're struggling to keep 6 as it is. What happens if you lose 3 or 4 points of GDP in the first quarter? How are you even going to make 6 by the end of the year? You're going to have to get 6.5, 6.6, something like that, just to make up the losses that you had. No, you're going to have even more, like maybe 8% growth, to recoup the few points that you lost in the first quarter. So it's very difficult. And again, I don't want to make a prediction because we don't know how long the virus is going to be or what impact it's going to have in terms of deaths, God forbid. But it's going to be very difficult for China. It's going to be more difficult for China to recover this time than it was during SARS. That's what I'm trying to say.